Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analyzing the S&P 500 followed by the Nasdaq100 and the Dow Jones 30 futures chart. Today is Tuesday, so the second trading session of the week, and we have the markets trading in the pre-markets down around 0.75 of a percentage point. S&P currently finds itself trading at 4,307. And I think what we're trying to achieve here is the 200-day EMA, which sits at around 4,270. We're currently in the process, in my opinion, of forming this ABC correction pattern off the back of a 5-wave Elliott wave structure. And of course, we've now achieved that pierce below the August 18th lows, which is, of course, necessary to complete this ABC correction. But the big question is, where does this ABC correction stop? There's nothing that really tells us how far we could fall. Some traders would like to take the distance from this A to B leg, which in this case would, take us all the way down to that 200-day EMA. So, that could and still probably is going to be the target here. I think that that's an area where you will find support. Whether we get there today or not, I'm not sure. But I just want to quickly draw your attention to this chart here. This is the average performance of the S&P 500 in September in every single pre-election year since 1935. So this is almost 100 years of historical data, and it goes to show that going into the end of the month, the 20th and the 21st trading day of the month of September is pretty much the lows of that month if you take out the first five days. So it kind of tells you that we could potentially be expecting to finish at a low before bottoming and then entering the month of October, which is actually historically very strong, especially when you have a negative September. So I'm not really aiming to make much money this week. I think I'm trying to position now a lot of my trades now going into next week. I want to be bullish. I want to be taking advantage. If we do go and touch this 200-day EMA, as you can see, I currently have my price alert set at 4,274. Where that 200-day EMA is. So as soon as we hit that, that's where I will be looking to put money to work. And I think it makes sense as well. We have the RSI that's currently trading at 33.39. So a little move lower here would, of course, take the RSI down towards that 30 level, which would indicate that we are oversold in the short run. And you could argue for a bounce as we move, we move into the fourth quarter there, the month of October. Quickly going over to the Nasdaq100, very similar to the S&P 500. I don't think that the Nasdaq goes down towards a 200-day EMA. From a percentage perspective, if we were to move that low, it would still represent a 4% decline from current levels. I don't think that we will get that low. I think that we will potentially go and test the 0.61 fib area from its peak to trough fib chart that I've drawn, which sits around 14,350. I've mentioned in the past couple of trading sessions that, with this potential ABC correction pattern forming here, we still haven't taken out the August low. So I think a move lower will be necessary for us to complete this ABC correction. I don't think it will look like this. I think it will look like this, where we go and hit the 0.61 fib area and not the 200-day EMA, which sits down all the way at 14,000. Although anything is possible, of course. But yeah, I think we still got some, a little bit more further work to be done here towards the downside here for the Nasdaq100 before this market then becomes viable, moving into that fourth quarter, where I do believe a face ripper rally will occur as many institutional investors play catch up after missing the first half of this year, where we saw some significant gains. And then finally, just moving over to the Dow Jones 30 team, Dow Jones 30 is now threatening to break below the 200-day EMA. We currently find ourselves trading at 33,812. This is a significant development. If we were to close here, that would be seen as a very bearish development here in the market. Yesterday we formed a very attractive looking candlestick, which of course is that hammer candlestick, where we actually even managed to finish out in a positive territory. And if we break below yesterday's swing low, then that's going to be very bearish here for the Dow Jones 30, and it could potentially lead to further decline. So this is definitely a market that I'm going to be keeping very close attention to moving forward. I do like the Dow. I do like the setup especially moving into the back half of this year. But there's plenty of trends forming here which are still suggesting that we are creating a series of higher lows and higher highs, which is very encouraging. I just think that we do need to see some signs or some evidence of support and bias hopping back into this market. But that's it for today's video, guys. I think, just to conclude on the video, I think that we still have a little bit further to go towards the downside before this market does bottom out and starts to become viable. Looking at the 10-year, we continue to achieve new highs for the year. Dollar as well, again, we're trading in the green today, although it may be just as slightly in the green by 0.03%, but we are still continuing to create new highs for the year. And until that stops, I think that we are going to continue to see some downwards pressure in the broader stock market. But the good news is that both the dollar and the 10-year bond yields are now at overbought territory, and I do expect a decline in the coming days and weeks ahead. Guys, don't forget, if you'd like to join my free trading signal group for 1 month, as I do offer a free trial, then make sure you scan this QR code on your screen. It will take you to my website where you can sign up. If you don't enjoy the service after 1 month, you can cancel at any time. You will not be charged. But of course, over on that Telegram group chat is also where I post my daily market research, where I share with you my plan of action and my research for that trading session prior to US markets opening, to help you guys navigate through all the volatility and noise. But thank you very much for watching today's video, and I look forward to seeing you all tomorrow.